Man, it's been a great year for stock investors. The market is up somewhere 28% or more. As of this recording, we've still got about a week and a half left of trading days before the year ends. We're getting close enough to the end of the year. It's time to start talking about some of my best performing stocks so far and what I think about those stocks going forward. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, we got a deal for you. I want you to go check out our special link. It's fool.com/unscripted. Go to that link and you can get access to the Motley Fool's 10 best stocks to buy right now. All right. I'm going to talk about my two biggest AI winning stocks so far this year. It's not going to surprise many of you that NVIDIA is tops on this list. It's up 164% year to date. The stock that's number two on this list for me and my best performing AI stocks, Taiwan Semiconductor. Stock is up almost 93% so far this year. Now, that might not look great compared to the insanely good 164% in gains so far for NVIDIA. But if you compare it to how the market's done, again, the S&P 500 up 29%, the NASDAQ 100 tech heavy index up over 32%. It's pretty good. 92% is an incredible decade, much less 1 year in return. So it's really, really good. It's now in the 4 comma club. Market cap above $1 trillion. At first, it consistently got above that back in October, and it's been up and down a little bit, but generally it's above it. So $1 trillion market cap, now you're running with the big boys. Tesla, Meta Platforms, those are the smallest of the 4 comma club stocks. Then you've got the giants like NVIDIA and Apple and Microsoft, all with market caps above $3 trillion. Point is, this company, that 92% in gains so far this year, has pushed it from a mega cap to one of the 10 largest companies in the world. More recently, Broadcom, another semiconductor company, has also passed that 1 trillion cap number. So now we've got 9 stocks trading on U.S. exchanges, all with $1 trillion market cap. And I think it's fair to say pretty much all of them have AI as a big driver behind their success so far and the expectations of success going forward. So with that said, thinking about my two biggest winners, NVIDIA, Taiwan Semiconductor, what's happened to bring them where they are, what I'm thinking going forward with those stocks. That's maybe the most important thing when you own big winners, is to eyes wide open as objectively as you can, really evaluate the business, think about your long-term financial goals, your short-term goals with your investments, and then act based on that. Generally, with your big winners, holding is the best thing to do because winners do continue to win. Winning businesses are so hard to find as it is. When you find a winner, it's usually best to hold on, let that management, let the company, their innovation, their moats, all of that stuff do all the hard work for you instead of selling a winner to then do the hard work of trying to find another winner. So that's my bias, is leaning towards just hanging on to those winners. But let's take a little bit closer look. We're going to start with NVIDIA's Q3 results that we got a few weeks ago. Revenue was up 94% in the quarter, $35 billion. That was well above the company's guidance, which is a little over $32 billion. A couple things. Number one, data center. That's where the AI stuff lives. We all know that. That was up 112%. Now, the theme, because the stock's actually down. This is a stock that's down a pretty good bit since earnings. It's been a massive winner over the past few years, though. Really over the long term, it's been incredibly well. But again, the 112% revenue growth for the data center business, the kind of the core AI business where it lives, that growth rate is slowing. It's slowed a lot. There's expectations it's going to continue to slow. But I just want to talk about a couple things that are really important. So we continue to see sequential sales growth. Again, not just year over year, but going back to the second quarter, sequential growth. They said that H200, the Hopper series of products, they saw significant sequential growth, and they're calling it the fastest product ramp in the company's history. Now, this is important because it happens even as Blackwell has transitioned into full production. So customers, even knowing that Blackwell's coming, this is the next iteration that's faster, more power efficient, more processing bang for the buck. Even as Blackwell is on the way, the H200 continued to sell very well. Now, of course, there's different applications and needs for both. It's not complete overlap. It's not necessarily a direct replacement product. But the point is even as new products continue to come to market, the existing and legacy products continue to sell really, really well. So that says a lot about how much pent-up demand there is. We're just starting to see, as we're seeing the infrastructure get built out, we're still in the early stages of monetization from the products that sit on it. It's one of the things that they highlighted here. Enterprise AI. Again, enterprise AI, this is taking those applications from the training of the LLMs and making co-pilots and agents that actually do stuff and actually do it well and consistently. We're just getting to the point where that's starting to happen. We're super early in those days. Let's jump over to TSMC's quarterly results. It's Q3 results. Revenue, $23.5 billion US dollars of revenue. It reports a lot of its other metrics and earnings. It reports in new Taiwan dollars, so like earnings per share, that's new Taiwan dollars. So we're just going to kind of focus up here on the percentages and the things that are in US dollars. So $23.5 billion. Beat guidance. Number one, beat guidance was a substantial increase from its second quarter. Again, just sequential increase from about 21 billion US dollars, 13% increase sequentially. Then we look at the growth from the year over year number, 36% jump. That's really, really good. Now, a couple reasons I want to highlight TSMC versus NVIDIA's revenue growth. So remember, NVIDIA is fabless. NVIDIA doesn't actually manufacture its semiconductors. TSMC is its contract manufacturer. So the big revenue growth we've seen for NVIDIA is a product of, number one, selling more expensive chips versus in the past, the value of those GPUs for AI is substantially higher. They're just more expensive hardware than GPUs and graphics cards are going in computers. That's a big thing that's important. Now, 36% revenue growth for TSMC. Again, they're making stuff. This is coming off of their manufacturing lines out of their foundries. So let's highlight the growth rates for TSMC. This is quarter over quarter. This is really important because we continue to see broadly generally weakness in a lot of segments. Automotive continues to be weak. We're finally starting to see smartphone revenue growth, high performance computing. This is where AI primarily lives, and increasingly maybe more in smartphone as we see things like Apple increase AI power things that are happening at the level of the device. But again, this is a sequential increase. This is from the second to the third quarter. This is not the year over year numbers. Continue to see accelerated growth. I want to take things a little bit further for TSMC, and we'll talk about another company that's tied up very much in the story of artificial intelligence and fabless semiconductor design, and that relies on TSMC as a contract manufacturer. That's AMD. This is a breakdown of revenue in their different segments. So data center revenue up 122% year over year, 22% quarter over quarter. This is directly comparable to the data center segment for NVIDIA. Really, really strong growth rates for AMD. One more thing that I want to highlight here from AMD, and this is from their earnings call. Dr. Lisa Su, I'm going to quote here and I'm going to highlight it. In the data center alone, we expect the AI accelerator TAM, total addressable market, will grow up more than 60% annually to $500 billion in 2028. She went on to say that's roughly the entire semiconductor industry size back in 2023. In other words, one of the key people in the middle of the semiconductor industry at the forefront. This is one of the key leading innovative companies in AMD. And what are they saying? We're going to keep seeing growth for years to come, right? So I think that's important to remember. That's why the market is valuing these stocks as much as it is. Now, what do I think? What am I planning to do? My specific situation, I'm still years away from retirement or sending kids to college or thinking about needing to tap any of this wealth and turn it back into money. I don't really have any plans to exit my positions in NVIDIA or my position in TSMC. They're big winners. They've done incredibly well. TSMC is going to remain one of the most important companies in the world. NVIDIA, it remains to be seen if it can stay at the forefront of AI semiconductor development. It seems that that's the case. But even as it's doing well, AMD is actually growing revenue at a faster rate now in its data center business. It's still a fraction of the size of NVIDIA's. I continue to hold. I will say this, I think momentum has grabbed these stocks, continues to pull them forward based on really, really high expectations. I think it's a good time to be putting them on the watch list. Maybe take a small position as a starter position, but I do think the market's probably going to give us better opportunities. At some point, the mania is going to cool, the market's going to cool down, something that's going to happen to kind of disrupt the growth story, even if it's just temporarily. And I think that could create a really good opportunities for investors to buy larger positions. Investors should be really mindful about building out positions at this point. I do think there's still opportunity here long-term. Just investors should be really mindful of valuation right now, not getting too caught up in the mania. Maybe look for better opportunities to build out a position for long-term returns.